and Chris Waltzing.
Well, back from his holiday break, it's Mr. Bob Chapman. Hello, Bob.
Well, hello again, and I'm happy to be back. I missed last week. I was just bored to death.
Well, you know what? We're going to have to make up for that today. We've got plenty of callers and topicality. So let's begin with the precious metals piece in the Investor's Digest of Canada. The chief investment strategist of Sprott Asset Management, John Embry, said in a response to gold manipulation, he says, "I'm not in the least bit concerned about these shenanigans because I believe considerable additional quantitative easing is inevitable, irrespective of what the Fed says or does in the short term." Goldman Sachs chief U.S. economist Jan Hatzius clearly shares my view, as he has suggested that ultimately as much as $4 trillion in quantitative easing will be required, although he anticipates that it will be staged. That gold and silver prices could go ballistic by year-end, and we're assuming when Mr. Embry says that, he's talking about next year. A lot of folks are saying, well, this is the end game. Mr. Embry goes on to say that they're going to inevitably collapse the U.S. dollar, and we're starting to see signs of that now. He says there's no example in modern economic history where following that course of action has led to a positive outcome. U.S. Treasury Secretary Timothy Geithner is talking his book when he says that the U.S. will not devalue the dollar for an export advantage. At the end of the day, that's exactly what they are doing. So they're saying one thing and doing another. What they're essentially doing, Bob, is lining the pockets of all of their friends, the bankers, the well-to-do, at the expense of whom?
You and I.
Exactly. The working class, the middle classes. It is a game that's been going on now at least 2,000 years and probably a bit earlier. A generation forgets that the powers that be can steal all of their income and their wealth simply by avoiding the taxes, because they've already taxed us up to the eyeballs and we're sick of that. But where people don't look for it is in the debasement of their currency. And that is exactly what is going on. And the Fed is coming up on its 100th birthday. Will it survive, Bob?
There's two sides to that, and I think Ron Paul is going to, and Bernard Sanders, to some extent, are going to give them big headaches. Everybody, with minor exception, in Congress, that's the House and the Senate, have been bought off. They've been purchased by banking, Wall Street, et cetera, et cetera. So they're not going to do what is the right thing. They're going to pay back the people who keep them in office. Constitutional convention. I think that's the only way to go after them. And just pass an amendment that says the Fed Reserve is history. That way it doesn't have to go through Congress.
I think it's a great idea, but at the end of the day, shows like ours, newsletters like ours, Goldseek.com, the James Turks of the world, the Jim Sinclairs, Jim Poplavas, so many people out there who are spreading the word, essentially taking a big chance, taking a risk, putting their name on the line to say this Federal Reserve is corrupt to the core, it's unconstitutional, and we need people like Ron Paul, Dennis Kucinich, who we will get into a little bit later, a fascinating story here, we'll talk about it a bit more, who now is also proposing to abolish the Fed. Back to Mr. Embry, he says his formula for the entire bull market, which has now spanned 10 years, has been to increase exposure every time there's been a correction. He says they should not be focused on the dollar value of their gold and silver, but they should rather focus on the number of ounces in their possession. He says gold and silver represent real money, time-tested for centuries. That is the key. He points out that these comments from Warren Buffett's business partner, Charles Munger, are ridiculous, that he doesn't have any interest in gold. Why would you have any interest in gold whatsoever if you were guaranteed a bailout and the best possible information simply because you're one of the boys? So to conclude, he thinks gold will remain in comfortably high territory by year end. He says silver is on its way to going above $50 an ounce. It's record high there in 1980. And he points out that it will be incredibly financially rewarding.
I think John is absolutely correct. There's nothing I can even make a comment on except he can he continues to be very conservative in his projections.
I'd like to further corroborate it, try to analyze his prediction of $40, $50 silver. It may be less frothy than it first sounds. Let's assume we're talking about $31 silver currently, and we're talking about a 30% increase, which, by the way, is conservative. We've just experienced a over 100% increase. So if we take that number, we're talking 30% on 30, well, that puts us at $40 this time next year. Once again, a conservative target. Of course, now, if we jack that advance up to 50 or more percent, then by the end of next year, we really could see $50 silver. If the dollar continues within its downward trend, which is a possibility, or if we see more trouble throughout the economic landscape as we're seeing this bond implosion in recent weeks, maybe higher interest rates, well, trillions of dollars could come flooding out of the bond market and into stocks and commodities, and that could literally light a fire under precious metals. So that leads to our next comment on this sector. James Turk, in a recent interview, said rising interest rates along with the surge in commodity prices, they're going to send the currency into the abyss. He says hyperinflation is very near.
Well, I think he's extraordinarily bright. He's got a wonderful education. He's under the banking business, and he's a very fine fellow. I'm not an intimate friend. I'm just an acquaintance over the years, and I think people should listen to what he has to say. Hyperinflation, I mean, you have to think of another term. It means the loss of faith in the currency which you're involved in. And you want to get out of the currency. You want to do something with the money before it's worth less. And that's what hyperinflation is. Sure, you have inflation, but hyperinflation is like vacating the field when it comes to currency and going to things like food and clothing, furniture, gold, silver, commodities. And that's where this whole thing is headed. I don't know what the title could be other than hyperinflation. I have to think about that. But you're right. That's where it's all going.
The writing is really on the wall here. Quantitative easing, up and running. The significant change that we've seen here, it's just astounding. James Turk claims that we have just reached stage 2 of the bull market. We have not even gotten to stage 3 yet. He says it's far into the future. And guess what happens when that threshold has been crossed? Well, as you might expect, the public enters the market and all bets are off. That's where you see that sort of speculative blow-off that occurred in 1998 through the year 2000 in the dot-com period. So just imagine the vast precious metals fortunes that are yet to be made. You know, Bob, I was interviewed yesterday on a live radio show. The host asked me, Chris, does $1,400 gold make you nervous? You know, what do you think about $1,400 gold? And I said, well, you know, if we think about it on pure dollar terms, I mean, sure, we've had quite an advance here. But, you know, as a safety net, as an insurance policy for the typical portfolio that has fared so well over the last few years, I think it's an incredible bargain. I mean, I think investors will look back at $1,400 gold and they will see $2,800. They will see $4,800 perhaps, maybe $5,000, $10,000 or more in the yellow metal. And these are not frothy targets. I mean, this is coming from Dr. Ron Paul, who now is calling for $6,000 gold. James Turk, $5,000 to $6,000 or more. The mining shares are indicating that strong accumulation is underway, and that bodes very well for next year in terms of performance as well as in price for the mining shares and for gold and silver. Do you care now that we're rolling into the next year to give folks a target for silver, gold, and mining shares, Bob?
Yes, and I agree with Jim, and I agree with yourself as well. I wrote back in June of 2000, a month and a half actually, after we bailed out. I think it was the first week of April. We said, out of the market, that's it. In fact, I was with Joe Granville that day, and Joe says, I couldn't agree with you more. And we went into the gold and silver coins, bullion, and shares. And the reason I'm citing this is because I said we're going to have 3, 4, or 5 phases And the first phase will end after we've broken out over 850, say to 1,000. The second phase probably at 3,000. The third phase probably at 6,000. Beyond that, I can't call it because there's no way of knowing. But that's a minimum. And I cited the figures of real CPI, of official CPI and real CPI, and it's all there. Just to get your money back or your buying power back, right now, John Williams says $7,700, and he's right.
$7,700, that's his new target.
That's correct.
John Williams of ShadowStats, one of our favorite economists and a regular on this show. Hope to have him back on soon. So, these are reasonable targets. And, of course, we're going to take this one step at a time. We don't have to go to $7,700, do we, all to benefit very much from being involved. And, frankly, Bob, do we really want gold north of $4,000 or $5,000, $6,000? Because can you imagine the type of socioeconomic chaos?
All I can say, Chris, is it is really out of our hands.
It is, and it's inevitable.
And that's right. And the people who have done this to us, the world is finding out who they are, why they do it. Historically, they've done it, and what they're trying to do with us as inhabitants of this world, and that is control us. And they have enough wealth so that if they take economies down deliberately, and they've done it over and over again, then they've been able to stay in first place, so to speak, because they have the wealth and the power to do it. Well, it's not going to work this time. And that's why I do so many radio programs. Just a half hour before we're on the air, I get called by a station that has 350 stations that they go out to.
As I mentioned earlier, we were going to talk about Dennis Kucinich. Well, this week he proposed a landmark reform bill of monetary policy. This will be a dramatic proposal here. He wants to reestablish fiscal integrity, congressional sovereignty, and regain control of our monetary policy from these private banks. He says a National Emergency Employment Defense Act of 2010 would allow the federal government to directly fund badly needed infrastructure repairs and fund educational system, which, as we know, is imploding, putting money into circulation without increasing our national debt. The bill would end the current practice of fractional reserve lending, whereby the economy depends on private financial institutions to lend our treasury money. He says the staggeringly bad employment situation, and he's right, we just hit 9.8% nationwide, and he wants to replace the Federal Reserve System's dependence on those private banks, as I mentioned, to directly inject liquidity in the economy.
And I think his approach is a good one under the circumstances. It's just like when you look at things and you say, well, we got to stop that over there, and so-and-so's against it, but normally I would be against so-and-so. And what that means is, in order to bring down the greater evil, what you have to do is make your enemy's enemy your friend. And that's what, I guess, politics in a way is all about. And we've got to stop these people by whatever means.
I do think that eventually it's going to stop one way or the other, probably due to economic collapse and or world war. So we're going to move on to this week's Roku movie. It's Wall Street. Money Never Sleeps. That's the follow-up to the smash hit 1987 movie Wall Street with Michael Douglas and Charlie Sheen. Of course, Michael Douglas returns as Gordon Gekko, and Charlie Sheen, though, does make a cameo performance. Shia LaBeouf is the co-star with Douglas, and I think he does an excellent job overall. However, I think the movie would have benefited greatly if Sheen and his father had played larger roles. All in all, I think it's worth the $3.99 download price tag, and you can view it through your computer, or you can download it through your Roku at the Amazon.com link. I think most of our listeners will enjoy it. Okay, opening up the phone lines.
I would like to learn how to listen to the radio live on the internet and who the upcoming guest would be. My name is Jeff. Thank you.
And first up, Jeff would like to know how to listen to the show online and where he can find a list of our upcoming guests. Hi, Jeff. You can listen to the current Goldseek Radio episode all week long, 24 hours a day, 7 days a week on our webpage, or you can download the show. If you happen to live in my hometown, you can listen to the show all week long via AM 1610.
Yes, hello. My name is Eric. I live in Virginia, and I'm calling because I heard a question on the last Goldseek program that regarded using debt instruments to purchase gold and silver, and the suggestion was just to keep up with the minimum payments and on a monthly basis, and just to use the appreciation of gold against the interest rate profit. The concern I have is I have a home equity line of credit, which is rated at a variable rate of interest. And currently the rate of interest is pretty low, but as you know, interest rates are starting to rise. And my concern is if I were to use that line of credit to purchase gold and or silver, I don't really know how the relationship of interest rates rising would compare to the appreciation of gold and silver. And so I don't know whether that would be a good choice or not. I could appreciate any insight you could give me on that. I've considered using that to buy gold and silver, but I have that concern. Thank you.
Next up, Eric calls from Virginia. He heard a caller talk about using debt to purchase gold and silver, and he'd like to keep paying his mortgage payments, but use his HELOC, home equity line of credit, to buy gold and silver and let inflation devour his debt. He's concerned that his line, though, will increase as interest rates increase, and this could affect the value of his investments. Eric, very glad you found us. I've received numerous emails and calls on this topic now for over 5 years, and I'll share with you the same response I've always made. Taking massive debt to invest in one of the world's most volatile asset classes is a train wreck waiting to happen. I'm convinced that silver is going to 50 and beyond, and gold to 1,600 and beyond, and much higher. But what if it doesn't come to pass? For instance, how many gold investors were caught off guard during the credit crisis? I'd wager 95% or more. Leverage is a double-edged battle axe that swings equally well in both directions. It provides profits and massive losses. If I was desperate to accumulate gold and silver, I would consider taking a night job or a weekend position for a few months, build up a position in gold and silver, and then sit tight for the next few years.
Well, I think your outline is very good, and what you have done, as you have told the writer, all of the pitfalls leverage can bring. Now, with that said, if the writer had asked earlier on, 10 years ago, whether he should do that, I would have said no. But today I say yes, which is an apposition to what you've said as a conclusion. And the reason why, even if the cost of money in using a HELOC or a credit card or whatever you want to use to borrow money, even if it went to 10%, I can envision gold and silver going up several 100% based on fundamentals. And so I am for using leverage of that kind at this point. Now, you can't get carried away. The loan has to be something you can easily pay. You have to have solid job or solid jobs as a husband and wife. You have to be, besides that, virtually debt-free except for perhaps a mortgage. And you have to have your wits about you. This is something that you can really afford to do. And if you come to those conclusions, you can go for it.
One quick note I'd like to make here before we continue with this topic. In a previous show about 2 weeks ago regarding shorting the box, they've actually made the margin restrictions at some brokers are far more lenient now with regard to shorting the box. So for folks that are concerned about locking in some profits, it really is one of the best ways to do so now. Regarding this topic, if you want to use leverage to do what Bob has suggested, Eric, I still have to stand by my guns here. I can't condone it. But if you do want to make some spectacular gains while risking a limited amount of money, you can purchase silver SLV ETF options now and GLD options. Just type in GLD or SLV and Yahoo, and it'll pop right up the options there. And let's just say you want to buy some options a year out or 2 years out. I mean, they're available. If you're willing to give up a tiny amount of money and say, you know what, I rolled the dice and I'm either going to make it big or I'm going to say goodbye to those funds. That's the safer way. If you put your mortgage and your home on the line, to me, the emotional factor there is really going to be magnified by the volatility of this particular market and then by the fact that your home is virtually being used as collateral for a casino-like bet. So let me suggest, instead of doing that, take a small amount of money, roll the dice in the options market. Maybe you hit it big, maybe you don't, but it's just money that you're comfortable with losing, maybe a couple $100 or less. And you can do this from time to time, and maybe you hit it big.
Yes, this is C.C. Joe from Cape Cod, Mass. I'd just like to thank Chris and Bob Chapman for just a great 2 years. Me and my wife, every Saturday morning, we religiously listen to the program. It's like a part of our life. We had some real tough times in real estate. We've made a great comeback. My basic comment is about copper. I recently invested heavily in copper. I bought 3,750 kilos, bullion bars. I bought them for half price what they'll list at retail. I know I can't turn them over for about a year or two because the time's not right yet. The last couple weeks, Chris, I've noticed, I think it was Tia Schiff today, and somebody else last week, maybe it was Bob, that mentioned copper, the thing of the future. I think you realize, obviously, because you guys know just about everything, that J.P. Morgan bought, I think it was 80% of the world's copper supply, 2 weeks ago? And they started that ETF. Also, a lot of other people have been talking about copper. Even Larry Kudlow was talking about it as the investment for the 2011. What do you think about copper? Thanks, Chris, and happy holidays. You too, Bob. You guys are great. Thank you.
C.C. Joe, he calls from Concord, Massachusetts, and he says he and his wife listen religiously to the Goldseek radio. He says he bought copper bars recently and that he thinks J.P. Morgan may have cornered the copper market to hedge their silver short position. He'd like our thoughts on copper. Thank you for the kind words. Please be careful in the real estate sector. Next year is likely to make this year look like a picnic. Moving on to your copper question, I think it's likely to benefit from the commodities bull market as well as the precious metals advance. Dollar weakness is, of course, driving demand in both arenas. The loss in purchasing power amid the stronger than anticipated economic growth has led the charge higher in copper and related commodities. Here's some food for thought. When the Fed came into power in 1913, it took one $20 bill to buy an ounce of gold. It now takes 70 of those $20 notes to buy the same ounce. In other words, the good old greenback is now only worth a fraction of what it used to be relative to gold, but as well as commodities. Another interesting aspect of the copper play, we regularly talk to Dr. Stephen Lieb, one of the, I think, top economists and financiers in the world, and Dr. Lieb regularly points out copper could run to unbelievable heights. Grain of salt with this comment. As high as $80 a pound. Some spectacular gains ahead. Keep in mind, it is speculative. All right, we're going to need to close down the phone lines.
Letters. Oh, we get letters. We get your letters every day.
First up, it's Louis. He says, hello. I was searching to find more about preservation of wealth. I came across your website. Can you tell me, are you still involved in the preservation of wealth and how things are going? We certainly want folks to preserve their capital, and we think one of the best ways to crystallize all that you've worked for is to use gold and silver. And the amazing thing is not only has it been a great place to protect your wealth, but it's also providing spectacular gains. Next up, it's Kerry from New York. He shares a very interesting article here about the foreclosure crisis. He says it's going to peak sometime next year, causing the economy to struggle, especially in California and states in default. Other banks are going to have a lot of trouble, and this is by Christopher Whalen. He says it takes about a year for a foreclosed home to work its way through the process, and we've been talking about that for years. Foreclosures making headlines now will not be completed until 2011 and even 2012. He's very concerned that the United States is going to be awash in foreclosures, and of course it's going to get worse because the foreclosure freeze has now passed. And what we're going to see is an increase in these imploding, negatively amortized loans. And as that occurs, those adjustable rate mortgages and exploding arms and options arms, yes, they're concentrated in certain areas, but they're also littered throughout the United States. And so you're going to see continued trouble. Kerry, by the way, now has his own show in New York City, blasting from the Empire State Building. So be sure and tune in. If you want more information, just send me an email. Next up, it's Catherine with a generous $100 donation. Catherine, thank you so much. Next, Julie asks about my graduate course I'm teaching at NDSU online, and it's in personal finance. Hi there, Julie. We're going to be releasing that syllabus in the hopefully next few days to a week or so. So I'll be sure and send a link to you if you are still interested. We've had quite a surprising response on people interested in this graduate level course that I'll be teaching in the next few weeks or so. Next up, Chris says, greetings and happy holidays. He's a big fan of the show, and he's been investing in precious metals. They've made 50% on their investments so far. He says on numerous shows we've talked about a Roku. He purchased one, and he's looking forward to it and wondered if we could please forward our pick list of movies and channels to him. Yes, we'll certainly do that. And the next writer says he wants to know about the Goldilocks trading system. The trading system is just a bare bones system designed to get people started and thinking about how important trends and money management are. And as long as you obey the trend and you keep your money management sound, you're going to be a successful investor, whereas 90% or more simply cannot do it, especially now that buy and hold has become buy and hope, and it's going to be probably not the place to be buy and hold stock investing for another 10 years or more. Let's move on to Jim. Jim says, I listen to your show regularly, have a lot of faith in your judgment, and you frequently touch on the housing market, and he'd like to know what we think about these toxic mortgages.
If you remember years ago, we picked out June of 12. I think it might be extended a bit because of the activities of Fannie Mae and Freddie Mac, Ginnie Mae, FHA, over these past 3 years. So it may be worse than what we thought it was going to be, and the time frame may go into 13 and 14 for all we know. It's just not good. It's going to get worse. Once it hits bottom, it's got to go along the bottom for at least 8 years. It's just not a place to be, and it's unfortunate, but it's easy to rent. It's cheaper to rent. Taxes are going up in order to pay for the debt that's been incurred by poor county and state management. It isn't a place to be.
Next time from San Francisco says, hi, I recently purchased Wealth Building Strategies, your new book, and he says it's a great book. He's halfway through it. He looks forward to completing it and rereading it over the holidays. He wants to thank me for the fine work, he says, and it'll serve as a great roadmap in coming years. He also purchased a Roku player. We appreciate all your questions and comments there. I'm going to close down the mailbag here.
Letters. Oh, we get letters. We get your letters every day.
We'd also like to hear your questions and comments. Why not call in our toll-free hotline? There's no expense to you at all. You can record up to 3 minutes and re-record if you like. You don't have to leave a name. You can record anonymously as well if you are so inclined. So you can call us at 1-800-507-6531. That number again, 800-507-6531. Whatever's keeping you up at night, whatever plans you have for your portfolio, maybe you'd like to bounce them off of Bob Chapman and myself first. Well, you can do so. 1-800-507-6531. And Bob, I know folks would like to find out more about the International Forecaster.
It's about business, finance, economics, social, political issues all over the world. We publish by email on Wednesdays and Saturday, runs around 40 pages each time. We have a hard copy that goes out twice a month for those who are not on the Internet. I like to feel that everything that you need to know is in that publication every week. You can get a free introductory copy by going to theinternationalforecaster.com, theinternationalforecaster.com, or you can go to www.intforecaster.com. That's intforecaster.com. If you have a question, we answer everyone. You can email us at bob@intforecaster.com. That's B-O-B at intforecaster.com. Or you can call toll-free 877-479-8178. That's 877-479-8178, and get a copy of either the email version or the hard copy version. And if you'd like to become a subscriber, they have a special deal there where you can get a 1-year subscription free of charge And I think the deal that they're offering is terrific.
Well, Bob, I understand that in your tropical locale, the weather has changed and it has actually dropped to a surprisingly cool 50 degrees. We certainly hope that you and Judy bundle up and stay warm. All right, my friend, we'll talk again soon.
You got it. Bye-bye.
To understand how we